Hey tech heads, welcome to the Monday edition of Tech Stocks Daily. We've got a sizzling lineup for you today. Google's taking a hit as Microsoft shakes up its device policy for China. But wait, there's a silver lining with AI advancements and market dominance still on Google's side. Microsoft's jumping into the iPhone bandwagon, beefing up security and eyeing solid growth despite some slip-ups. Meanwhile, Apple aims for a mind-blowing $4 trillion valuation, pushing innovations from AI-driven iPhones to producing AirPods in India. And drama alert, UiPath's facing serious heat with class action lawsuits over its botched AI claims. Excited yet? Let's dive in. Hey tech enthusiasts, hold on to your gadgets because today's news cycle is an alphabet soup of updates featuring none other than Google. Yup, Google's parent company Alphabet Inc. is making waves in the tech world today, and not necessarily in a good way. So, let's unpack this. Google titles are taking a bit of a hit today, trading lower as Microsoft makes some moves that really ruffled Google's feathers. Specifically, Microsoft has instructed its employees in China to ditch their Android devices in favor of Apple's iPhones. Yup, you heard that right. The House of Windows wants its Chinese employees to go full Fruit Ninja. This has sent ripple effects through the market, hurting Google as Android is, well, Google's baby. Imagine your ex telling your kids they can't play with your toys. Ouch. But it's not all bad. Despite this hiccup, Bank of America analyst Justin Post still maintains a firm buy rating for Alphabet with a shiny target price of $200. Why, you ask? Well, Google has been steadily growing its market share in the global search domain, now holding a firm 91.1%. Bing, by comparison, is standing in the not-so-mighty shadow with just 3.7%. So, all Bing users can practically hold a club meeting in a dressing room, while Google's user base is still literally the size of Texas. Moreover, there's more to Alphabet's future than just clicks and searches. With the promising integration of AI-driven features, Google's search algorithms, YouTube, and cloud services are looking fictitious. Take Google's Gemini integration, for instance. By advancing AI overviews, they're attracting more users and monetizing their platform better. Translation, more eyeballs and more dollar signs. And on the topic of YouTube, Google is flexing its AI muscle again. The upgraded Erase Song tool now allows content creators to remove copyrighted songs from videos without messing up other audio elements, thanks to AI. Sounds like a DJ mix separating vocals from beats, only in your YouTube editing suite. Pretty slick, huh? This move will tickle the fancy of YouTubers trying to keep their content fully monetized and not facing restrictions due to copyright claims. Smart, YouTube. Very smart. If your eyebrows are high enough to touch your hairline already, here's another juicy tidbit. Google's Supreme Court drama. The Supreme Court has essentially told Google to cool it with the GPS surveillance on bail conditions, labeling it as an invasion of privacy. The court annulled a condition that required accused individuals to drop a pin on Google Maps for police to keep track of them. Think Big Brother vibes? Well, the court said nope, that's unconstitutional. It's a major win for privacy advocates and quite a twist in the legal tale of tech usage. Finally, in Gmail news, those inboxes are about to get smarter. Google's rolling out a new Summarize This email feature so you can get a highlight reel of lengthy email threads. No more scrolling through email novels on your morning commute. Just imagine Cliff's Notes for every verbose email your boss sends. All powered by, you guessed it, AI. So that's all for today, folks. Remember, even when the stock dips a bit, it's not all grim in the land of Google. Between privacy wins, AI enhancements, and market dominance, Alphabet's got more chapters left in this tech saga. Keep an eye on those stocks, and don't leave your search engine loyalty hanging in the balance. Stay tuned for more updates, and keep your tech vibes high. Hey tech enthusiasts, buckle up because Microsoft has been making headlines today with some major moves that are shaking up the tech world. Let's dive into the latest updates. Mandating iPhones for work in China. First up, big news for Microsoft employees in China. Microsoft has reportedly issued an internal memo mandating that China-based employees only use iPhones for work purposes starting this September. This new rule comes as part of the company's Global Secure Future initiative, which aims to beef up internal security after several recent cyber attacks by state-sponsored hackers from Russia and China. Why ban Android devices? Well, Google Play isn't available in China, meaning there's a fragmented landscape of local app stores like those from Huawei and Xiaomi. Without Google's mobile services, Microsoft sees Apple's App Store as a more secure and consistent platform for essential apps like Microsoft Authenticator and Identity Pass. To smooth the transition, the company is generously offering iPhone 15 devices to their Android-loving employees. That's some fancy company swag. The backdrop here is a bit more serious. Microsoft has been under scrutiny for security issues and was criticized for avoidable errors that allowed hackers to swipe thousands of emails from US government agencies. So yeah, you can see why they're tightening up security measures. Microsoft's position in the software industry. Moving on, another report dove deep into where Microsoft stands in the software industry. The analysis looked at various financial metrics like price-to-earnings ratio, price-to-book ratio, and return on equity to see how Microsoft stacks up against its competitors. The findings? Mixed, but mostly positive. Microsoft is reported to have lower debt compared to its top 4 peers, showing a strong financial position. The company's revenue growth, profitability, and market share are all solid, but the high price-to-sales ratio could suggest the stock is overvalued based on revenue alone. Microsoft's strong cash flow generation and hefty EBITDA highlight its profitability, but its efficiency in utilizing equity is still a bit of a concern. AI innovations and investments. And let's not forget AI. One hot topic is how Microsoft is positioning itself in the soaring AI market. While AMD is working hard to chip away at NVIDIA's dominance in AI hardware, Microsoft is leveraging its investment in OpenAI. This strategic partnership has allowed Microsoft to integrate advanced AI models into various services like Bing, Office features, and Azure. The company is also taking AI to schools in Hong Kong, aiming to enhance educational experiences by integrating AI tools into the curriculum. This could serve as one of the many ways Microsoft proves the real-world value of its AI initiatives, potentially inspiring other regions to adopt similar strategies. Why it matters. So why does all this matter? Microsoft is showing a strong commitment to security, continues to prove its resilience and innovation in the software space, and is making waves in the rapidly expanding AI sector. Whether you're an investor, a tech enthusiast, or just love hearing about the latest in tech, Microsoft is definitely a company to watch. So there you have it, folks. Microsoft is staying ahead of the game with strategic security policies, solidifying its industry position, and diving deep into AI. Stay tuned for more tech news and keep those notifications on. Hold on to your AirPods, folks. Apple has been making headlines today for a slew of reasons that are bound to perk up the ears of anyone with a stake in tech, finance, or just an unabashed love for all things shiny and new. First up, we have Apple's sky-high ambitions as they eye the path to a $4 trillion valuation. Yes, you heard that right, trillion with a T. This optimism is largely fueled by the upcoming iPhone 16, with its AI-driven features creating buzz among investors and tech enthusiasts alike. Wedbush analyst Daniel Ives predicts that Apple will see a significant resurgence in the Chinese market, especially with the iPhone 16 launch. According to Ives, Apple is poised to become the gatekeeper of the consumer AI revolution, potentially adding $30 to $40 per share. Cupertino, you never cease to amaze. Not to be outdone, Apple's wearable segment is also in on the action. Rumor has it that the Apple Watch SE will be revamped with a plastic casing to better compete against Samsung's Galaxy Watch FE. The new SE model may take a leaf out of the iPhone 5C's colorful polycarbonate book. So if you're one to sweat through your workouts or just want something robust and budget-friendly, this could be a game changer. Speaking of changes, you've got to see the latest cinematic endeavor from Apple. Recently, they released the title and poster for F1, a big-budget Formula One movie starring none other than Brad Pitt. Slated for a June 2025 release, this flick is already revving engines and reportedly had its first sneak peek at the British Grand Prix. With a hefty budget that could reach $250 million, Apple is not just coasting along. They're speeding into the fast lane of the film industry. In manufacturing news, Apple appears to be reigniting its Make in India plans. After a hiccup with iPad production due to government restrictions, Apple is supposedly eyeing Pune for producing AirPod cases and ramping up local iPhone production with Foxconn. With plans to take a quarter of their iPhone manufacturing to India within the next 3 to 4 years, this move could significantly boost India's economy. It's a good day to be invested in Indian industrial growth, eh? Last but not least, some potential bad news on the Apple Watch horizon. The highly anticipated Series 10 might not include sought-after features like blood pressure monitoring and sleep apnea detection due to technical and legal obstacles. Looks like we'll have to wait a bit longer for those little wrist doctors to come to full fruition. So, whether you're glued to the iPhone upgrade cycle, eagerly awaiting Brad Pitt's F1 debut, or speculating on Apple's next geopolitical move, one thing's for certain: Apple always keeps us on our toes. Get your popcorn, tech enthusiasts, because UiPath is making headlines big time. For those just catching up, let's break this down. UiPath, a business automation software company, is now under the glaring lens of several class action lawsuits for allegedly misleading investors about the efficacy of its business strategy and, yep, you guessed it, their AI-powered products. Cue the dramatic courtroom music. So what exactly happened that's got everyone riled up? According to multiple complaints, between December 1st, 2023 and May 29, 2024, UiPath made bold claims about its turnaround strategy. They assured investors their shiny new business automation platform enabled them to close bigger, more strategic deals. Plus, they hyped their AI-powered tools as game changers. Turns out there were a few wrinkles in that picture-perfect narrative. On May 29, 2024, things started to unravel. UiPath not only announced disappointing first quarter 2025 financial results, but also divulged that they'd missed the mark on their FY 2025 revenue guidance by a whopping 10%, or about $150 million. As if that wasn't enough drama, CEO Robert Enslin exited stage left, and back came the previous CEO, Daniel Dines. The fallout? Well, UiPath stock did a nosedive, plummeting more than 30-40 cent, from 18.30 down to 12.7 in just a day. That drop caused significant financial heartburn for affected investors, paving the way for these class action lawsuits. Now, why are investors up in arms? The complaints across multiple law firms, Robbins LLP, Bernstein Liebard LLP, Levi & Korsinski, and Bleichmar Fonte & Ald LLP, are strikingly similar. They argue that UiPath's turnaround strategy failed spectacularly, with failed investments, inconsistent execution, and an inability to scale their supposedly revolutionary AI tools. Instead of eliminating confusion, these products allegedly cause more confusion among customers, putting a damper on large, multi-year deals. The central allegation is that UiPath was aware of these issues but chose to paint an overly optimistic picture for investors. And now law firms are stepping up to hold UiPath accountable, urging affected shareholders to join the class action suits before the August 19, 2024 deadline. This could mean serious repercussions not just for UiPath but also for its top brass as investors seek to recoup their losses. But enough of the legal jargon. What do you think? Is this a simple case of business not going as planned, or were investors genuinely misled? I want to hear your thoughts. Do you have a hot take on UiPath's actions, or on the implications of AI and business automation in general? Drop your comments below, and let's get the conversation rolling. Who knows, maybe we'll get some insider tips or just some good old tech gossip. Talk about it, debate it, just spill the tea. Let's talk about Google, or should I say Alphabet Inc. Buckle up, folks, as we dive into whether you should hit the buy, sell, or hold button on this tech behemoth. First, let's recap. Alphabet's stock took a hit today after Microsoft told its employees in China to switch from Android devices to iPhones. Ouch, that's a blow for Google in one of its major markets. It also has legal dramas with the Supreme Court cutting down its GPS surveillance on bail conditions, and a few bumps in the road never go unnoticed in investor land. But here's the silver lining. Despite these hiccups, analysts like Bank of America's Justin Post are still drinking the Google Kool-Aid. He maintains a buy rating with a target price of a whopping $200. Why? Google owns 91.1% of the global search market, while Bing holds a meager 3.7%. Seriously, Bing users could have a team meeting in a minivan. Moreover, Google's AI game is super strong. They're integrating AI-driven features across Google Search, YouTube, and cloud services. These innovations are expected to keep users engaged and rake in the dough. Plus, Google's YouTube is getting smarter. The new Erase Song tool using AI to remove copyrighted music without tanking the audio quality is a massive win for content creators. Hello, happier YouTubers and more content rolling into Google's ad streams. So should you buy, sell, or hold Google stock? Drumroll, please. I'd consider buying more shares of Google. Despite the short-term setbacks, the company's robust market share, continuous AI innovation, and strong analyst support make it a promising bet for the future. But remember, tech aficionados, always do your own research before making any investment decisions. Stocks are as unpredictable as a cat on a Roomba, so strategize smartly. Do yourself a favor and dive into your own due diligence before making moves in the stock market. Catch you soon with more tech updates. All right, tech fans, that's a wrap on today's NASDAQ market activity. Google took a hit but showed promise with AI advances and search market dominance. Microsoft rattled things up by shifting its Chinese workforce to iPhones and hit a few highs and lows in the software game. Apple is shooting for the stars with a $4 trillion valuation while expanding its global footprint and media ventures. UiPath is in hot legal water over investor allegations and a shaky turnaround strategy. If you enjoyed today's rundown, don't forget to like, subscribe, and share this video with your fellow tech enthusiasts. And remember, there's more tech goodness coming your way. Join us again tomorrow for another exciting update.